So you're looking to buy a house, or you're just exploring the possibility, or you simply just want to learn a little bit more about government loans and what financing opportunities are available to buyers. Well, you're in the right place, guys, because today I want to explain a little bit more about conventional loans and how this loan can actually help you own your first home or an investment property that you may be looking into. So stay tuned. So a conventional loan, unlike government-backed loans, is not supported or insured by any government agency. So unlike FHA, VA, or USDA loans, the conventional mortgage actually comes from the lender himself that incurs the risk without the help, so to speak, of a government agency or the government itself backing the loan. This is the reason why a conventional loan is typically much more difficult to qualify for when compared to other government-backed programs. So a conventional loan usually will have the best terms for the client that can actually qualify for them, for the simple reason that, for example, an FHA loan will have mortgage insurance for the life of the loan, whereas when you hit 20% equity on your property, meaning that the value of your home goes up by 20% or you pay 20% of your mortgage, the PMI on a conventional loan will completely vanish automatically, which is not the case in other loans. And this is truly beneficial because it is very possible to get a much lower monthly payment over time. And one way you can actually do this since the start is by putting down a 20% down payment. However, if you're looking into buying a pretty substantially expensive property, it might not be the case. You know, not just everybody has that large sum of cash in his bank account or in her bank account. And even if you do, you may be looking to employ those funds into other investments that might help you grow wealthier. So it is beneficial if you are, if you do not have a huge surplus of cash, to just go with the bare minimum 5% down for a conventional loan, which is a pretty, hefty sum as well on an expensive property. However, it will help you have that advantage of not having the PMI for the life of the loan. Nonetheless, if you're a buyer or a borrower that you're watching this video and you do have FHA, do not fear, because you are able to refinance to a conventional loan, and that way you can get rid of the PMI. So it's not the end of the world if you have an FHA loan. Actually, if you're a first-time home buyer or your financial situation is not the best, it is actually beneficial to start with an FHA loan, getting to your home, stop paying rent, and wasting your money. If you have the ability, the financial ability to own a home, and basically take advantage of FHA to own your property, and then as soon as your financial situation improves, you're able to refinance and get rid of the PMI and get into a conventional loan. I know this is a lot of information, guys, but trust me, these can truly be beneficial for you. And if you want to know more details, you can feel free to reach out to me, call me, text me, whatever it is. I'm happy to help you guys out in anything I can. But without getting deviated too much from the topic, I want to explain to you guys that conventional loans, usually the most popular ones are the conforming ones. For conforming loans will generally meet the limit set each and every single year for a conforming conventional loan. If you surpass that limit, meaning if you are looking into buying a property more expensive than the limit set out, well, then you will have to look into jumbo loans, which usually carry higher interest rate. However, that's not necessarily a problem, because jumbo loans are for specific scenarios. They're not, for example, the most popular conventional loan, as they are a non-conforming loans, and there's also non-QM loans, but that's a whole nother topic. But generally speaking, if you do meet the limits and you can qualify for the DTIs required, the credit required, and the down payment requirement for a conventional loan, you will be more than happy going with a conventional conforming loan, which is actually the most popular loan out there for the longest time. But in recent years, FHA has been catching up. They have truly changed the game with lower interest rates that they're able to offer. And on a general case, on a case-to-case basis, sometimes you may be able to get a better rate off of a conventional, but FHA has truly made homeownership a reality for many people that are not able to specifically meet the credit and DTI ratio requirement of conventional loans. So yes, guys, generally speaking, if you are able to qualify for a conventional loan, it may be the best route. However, if, for example, you're looking to put in as little a down payment as possible, which I have many clients that, given the current situation of the economy and the market, they prefer to go with an FHA 3.5 down, well, then it might be beneficial for you to go, for example, with an FHA loan, or if you're a veteran, apply with a VA loan, or etc., etc. However, if you are able to put down 5% of the sales price, and you are looking into the benefits of the conventional loan that I have spoken to you guys about, it might be one of the best loans out there. Also, another thing that I wanted to discuss with you guys is that with a conventional loan, you're not tied to the property. So what do I mean by that? Many loans backed by the government, the reason why they were even created in the first place was to allow more people to achieve their dream of home ownership and be able to afford a property. So what does this mean? Since the final goal was to allow people to achieve home ownership, usually they carry a clause or a requirement for the person applying and qualifying for the mortgage to actually live in the property for a given period of time. And then if sometime down the line they decide to sell it or use it as an investment property, that's possible with time. However, a conventional loan is not a government-backed program, as I explained earlier, so you have complete freedom on what to do with the property. You can buy it and qualify for the mortgage tomorrow, and in 2 days you can rent it out to someone. You're not forced to live in the property, so you're able to utilize it in whichever way you may deem it to be the case, to be convenient to you. You can use it as a second home, investment property, etc., etc. Also, and this goes for any mortgage per se, but I want to give you guys a tip. Just making one extra mortgage payment a year will go directly to your principal, not interest, and that will allow you to cut the loan term by a substantial amount, which means that you can, first of all, have a shorter mortgage. So my advice is to still go for the 30-year, not 15-year, because the loan amount to be paid, rather the mortgage amount to be paid each and every single month, so your monthly payment will be lower. But then if you make that extra payment every year, you're able to cut down the term of the loan by several years, and that will save you thousands of dollars in interest. Not many lenders give you that advice, but I want the best for you guys, and this is why I'm sharing this tip with you that can be insanely beneficial, especially if, let's say, you get a raise at your job and you employ that money in an intelligent way and you have that surplus of money. This is a great investment because although you're not going out of your way to find new ways to make money with this strategy, well, you're able to employ that money. That's still gonna save you so much money, of all those years of extra interest that you would have had to pay if your loan term actually ended up being longer. So, guys, this is just advice. It doesn't mean go out and do it, but it's something that you should consider and, speak it with your family and take it, very deeply into consideration, because it can truly be game-changing and life-changing, So if you guys are, still contemplating on which option to utilize, well, it is always best to, speak to a lender such as myself and see what loan program is the best for you, or what loan program you're able to qualify for. And then just always understand that even if you are not able to qualify right away for a conventional, it is always possible to refinance to it and get the benefits of potentially lower monthly payment. However, FHA had some recent rule changes that actually lowered the percentage points of the MIP, which is great news, meaning that your monthly payment even with an FHA will be lower. Nonetheless, if you're able to refinance and just get rid of it completely with a conventional, it is always a possibility that is available to you. Guys, thank you so much for tuning in and watching the video. Share it with as many people as possible that you believe may benefit from knowing this very good financial information. If you have any more video ideas, feel free to comment it down below and let me know. I read each and every single one of your comments, and I do truly take it into consideration. And as always, guys, thank you so much for being around. Like the video, subscribe to the channel, and take care.